Everybody, it's April 17th, 2020, and I have my buddy Santino here, and we just had a wonderful over an hour conversation about everything amazing, and I kind of forgot that we were going to do a recording. So we're not going to discuss some of the things we just got done discussing. We're going to discuss some new things. So I asked if Santino could do some things today. I want to talk about cryptos a little bit. There's an overlay I want to show. And I was hoping we could get his perspective on precious metals and kind of where we're at, and maybe just some where we're at in regards to this unfolding of the CV thing that's gotten a lot of people still twisted up. So, hey, Santino, how you doing, buddy?
I'm good. How are you?
I'm doing good, man. Been an interesting week for sure. What's new with you? Anything new this week?
Well, boy, a lot's happened since the last time we got together.
I know,
That's
right?
so yeah. No, it's been an interesting ride for sure the last few weeks.
Have you been, you kind of, you did a good job kind of explaining that you thought our challenges would be the economic repercussions of some of the CV stuff. And I agree with that and definitely agreed with it at the time. What have you been most in? So you would agree that that's what we're still experiencing here?
Oh yes, 100%.
Many ripples to come, right?
Yes.
What have you been surprised by? So something you didn't anticipate, maybe, or didn't.
I guess, the speed of everything and the intensity of everything. It's one thing to prepare for, a reset. I have to say I'm a little surprised we got it as soon as we did, but of course, you know, CV changed everything and brought it about sooner, and it just shows you how weak, where all the cracks were. It's revealed everything, right? So that and how quickly the Treasury and the Fed, the U.S. Treasury and the U.S. Fed has reacted, and how quickly the world banks have reacted, that is not comforting. That tells me their reaction, their extreme reaction that we've never seen in the history of economics, tells me that they see what we see. They
Yeah.
see the danger we see about what's coming. That should not give anybody comfort. Everybody's feeling happy that they're getting these checks, and the government, I got my money in 2 days, and they're not seeing the big picture, which is, why are they doing that? Why are they so worried? We should be worried that they're this worried.
Yeah, it definitely tells you a different story than one that's been told for the last maybe 3 months, 6 months, even a year about the state of things. I've been most surprised by industries and people. So let's say people so quick to resort to whatever's unfolding in front of them. They put it in their own picture box. I haven't seen a whole lot of people step outside. So as far as people waking up to this, that, or the other, I'm sorry, but I haven't really seen that. What I've seen is people become more entrenched in their already existing beliefs about whatever. So I guess I was a little surprised by that. I've seen certain structures of industry, education, oversight, social programs. I've seen them basically shaken to their core and recognize that they really don't have plans for things like this, universities, higher level education. So I think there's going to be, I think if you're a tech person, one thing that I came to over just the last few weeks is that if you're a tech person, you're probably going to do really well. You're going to do really well in helping businesses, industries, universities, public schools develop and probably more importantly, administer online resources. There's companies that actively plan and industries that actively plan for disaster recovery. But in my experience, something like a virus, not really. So I think this is going to be interesting how it's going to change certain industries. Any thoughts around that?
Yeah, well, absolutely, Moo. That's a whole video onto itself,
Yeah.
on the changes it's going to come. Well, just speaking just very broadly, I would say that there's not going to be not one place in society and politics and economics that isn't going to be changed by what's happened, because understand that this is they induced a heart attack on the world economy. So we're suffering a heart attack right now. So what happens after a heart attack if the patient survives? That's just follow what happens. You know, initially they survive the initial heart attack. The heart starts working again, but there'll be spot on the heart, a number of place on the heart, which has gone dark or is damaged or scarred, doesn't work. The heart ticks along for another year, a couple of years. And then, you know, buddy has another heart attack, and that's the one that kills him.
Yeah.
So I kind of keep it simple. And that's what I see, is that we're going to get a period of, oh, we survived this. You know, Gilead has good news on a drug. You know, okay, we did some damage. There's some damage here. We're real about that, but we can make it up in a couple of quarters. There'll be some enthusiasm about where we're going. People will feel better. Maybe not everything opens, but they're thinking, well, we'll get back to business sooner rather than later, not understanding that this is a once in a millennia change that's happening for an economy, a race, of the race of humanity. There's a much bigger game being played here. When that sinks in, that's what I call the first shoe that drops is a soft shoe, is a running shoe. The second shoe that drops is an iron shoe.
Interesting way to put it, buddy. We spent about over an hour, kind of talking about motivations and the why questions. And one thing I definitely appreciate about you, and I actually like about myself, I can say that, right, is that we stay away from the whys, the motivations of this group or that group, or, and I really appreciate that. About your analysis and our talks, is that we kind of stay away from some of these whys, the motivation. I think a lot of people live there. It's important for their own, I think, safety and security and pathology to make sense of the why. You know, why does this happen? Why do bad things happen to good people, Santino? Who's behind it? Who can I point to, right? So planned, unplanned, that's not really a place that you and I live, and I appreciate that. I've noticed a lot of discussions about some talking heads and some other things where, you know, they seem to be real caught up in the whys. I don't find it that beneficial. Any quick thoughts about that before we get into some other things?
Yeah, I'm with you. I just don't find it particularly useful. I don't seek reasons. I just deal with what I have. Whatever poker hand I've been given, that's the one I play. And yeah, you can constantly be searching for the wizard behind the curtain. You know, but it'll be a rabbit hole you'll never get out of, and you won't make good decisions in that rabbit hole. You'll be pretty much immersed in darkness there. So, you know, deal with what you have in front of you. Be aware, be conscious. I'm not Pollyannish. I'm not suggesting that there aren't power structures in the world competing with each other. You know, that there aren't forces at play that we don't understand. But I'm just not sure it's particularly useful in my day-to-day decision-making process.
I agree with you 100%. Thank you for that. Well, let's get into one of the big reasons I wanted to talk to you today, or at least record part of this today, was precious metals and gold, and how high can it go, and what does it mean, and anything you want to talk about in the precious metal space, I would be interested in hearing. It's something you know a lot about, and I think, yeah, could be really interesting to other people too. So what are your thoughts?
Well, I'm happy to see that gold has been performing next to almost all other asset classes, with the exception of Bitcoin, though, I might add. It has not outperformed Bitcoin, but it does perform, although they perform the same role, they also are not the same in some ways. So as you know, I'm a big believer in gold. I think eventually when this whole thing comes down, I'm talking, you know, a decade or two down the road, it will be gold that will remain standing above everything else, including crypto. That's my feeling. But we got a long time to go between now and then. So I think, you know, when you have things happening like the Treasury and the Fed being combined, I mean, could you imagine someone telling you that 5 years ago or 6 years ago? You'd have called them a tinfoil hat wearing conspiracy theory nut, right? In a million
Yeah.
years, they did it overnight and with no fanfare. There was no protests in the streets, nothing. And what does that mean? That means the Fed is going to inject as much liquidity as it can into the system, and the Treasury is going to hand out checks to everybody, like Santa Claus. And they're just going to keep doing it. And
For as long as necessary for the amount that's appropriate. Yep.
Right.
Absolutely.
So,
yeah.
I mean, that's the perfect environment for gold, perfect environment for Bitcoin. But it won't be a straight line up. For people looking for the moonshot, everybody's always looking for the moonshot. It just doesn't work that way. No. It's in spits and spurts. You saw that we got hurt. Like liquidity is a problem. When people get scared, the first thing that a scare like that searches out is anything that's over leveraged.
Yeah.
So there's a hunt for anything that's over leveraged, and that gets sold. So you need money to do that. You need, how do you meet those margin calls, those leverage calls? Well, you sell the performing assets, which is gold and Bitcoin. They've been the performers. Nothing else really has performed all that well. So they sell it in the search for dollars. Everything is a dash to cash. So that it's not won't be a straight line. And we may actually see a slight easing in the precious metals complex as the dollar reasserts itself.
Yeah. Thanks, Santino. I appreciate that. Boy, it's interesting where we're at, many of us have believed that the disconnection between paper price and physical price of precious metals was just a matter of time. Obviously, through different stressors and stress points and stress time periods, this is going to happen. This is why derivatives were created. This is why there's things such as leverage. This is why there's things such as premiums at a local level or retail level that I think is missed on a lot of people. Not the premium part, but the derivative part. Everybody wants to complain against derivatives, but nobody wants the farmer to produce a field full of corn and then go out of business or have no way to protect himself against, have a leveraged position against the actual physical corn he's holding, right?
Yeah, it's a point that often gets, I'm glad you raised it, because a lot of people, look, the Twitter stuff and the tweets and the little captions, they're great, but they don't necessarily, you don't get an understanding of the plumbing and how it works through those. So
nope.
If you're a farmer or you're a silver producer, a miner, you are hedging against your production to protect yourself. You use derivatives. You use futures markets to do that. They're not all evil, right? There's some things that they're there for reasons. Now, I agree that the COMEX, or some call it the CRIMEX, I love that. Yeah. They're eventually going to become irrelevant because of the shenanigans that's been going on there. But that process is going to take time to develop. And we're going to get a spike in paper prices before that happens. Just to give you a form of reference, like in the last spike that we had, and whenever that was, 2009, 2010, gold got to 1950, silver got to just around the $50 mark in paper price. Yeah. So you look at gold now, gold's at 17 and change, like the June contract. So it is within a hair's throw of a stone's throw of getting to the 1950. But look at silver. Silver is stuck in the $15 range. Right. Well, silver eventually is going to have to go to 50 bucks.
Right.
So it's going to be a slingshot effect. The paper price is going to absolutely skyrocket. They'll do everything they can to manage the rise, but they already know the rise is coming. They know the rise is coming, so they're preparing for it. They've covered their shorts, the bullion banks, the hedgers, the JP Morgans of the world, which, by the way, they're a big player, but they're not the only player. Banks are playing this game as well.
Yep.
So they're covering their shorts. They're busy covering their shorts, and they're going to let it run. But it won't be a straight shot right there, because they're going to have to manage its ascent. Eventually, if the pressure builds enough, even they won't be able to. So U.S. dollar also plays into that, how the U.S. dollar is performing, where it is. Eventually, when we start getting near the end game, you're going to see a spike in USD, a spike in gold, a spike in silver, a spike in Bitcoin. But we're not there yet. You know, it's there'll be easings, sort of ebbs and flows before then, with a slope upwards.
Thanks for that. I really appreciate it. Right now we're looking at gold at 1711, I think is the paper price last time I looked. But, you know, you go to a place like Amex, you know, and if you're going to, well, let's just take a look. I noticed that APMEX, sorry, I said Amex, APMEX. If you're doing a check or wire, you're already in the 1886 range. If you're using BTC or BCH, you're in the $1,900 range. If you're using a credit card or PayPal, they're almost $2,000 an ounce at 1970. And deliveries are anywhere from, you know, 3, 4, 5, 6 weeks out. That's interesting to me.
Physical supply has certainly been constrained for a lot of complex reasons. You know, the CV being one of them. They're shutting down mines, but the mines to the dealers have already been, you know, just-in-time inventory, right? They don't keep a lot of inventory because it's cost money to do that. So they've been playing this game where, you know, you tell me what you need, I get it to you. They haven't built up their stockpiles. So there's a supply disruption, and that creates, you know, a demand as well, because as soon as people think something is restricted in supply, they psychologically begin to want it, right?
Oh, for sure.
Look at toilet paper. Right? Toilet paper. Right. I mean, they've got warehouses full of toilet paper. They can't get it to where it's supposed to go, but all of a sudden there's a premium on toilet paper. So this is kind of how it works. Now, it will to some extent be resolved as they begin to increase production.
Yeah.
And the mines come back on. Like in Canada, the mines are already coming back on. The mints opening up. So some of that will be relieved. I think short term, you'll see premiums come down. If it were me, I wouldn't be buying metals with these kinds of premiums. Yeah. I would wait till they came down. But it is the beginning of something. It's not it's the beginning of something. And we've seen this play out before in the precious metals complex, where the same thing in 1980, same thing in 2016, exactly like this. You had shortness of supply. They got caught off guard. Miners got caught off guard. Dealers got caught off guard. They raised their premiums. More came on. You were able to get more supply, but by that time, the paper prices had started to rocket. And I suspect there's nothing to make me believe we're not going to go through exactly the same cycle.
Yeah.
By the way, in an environment like that, the miners become an extraordinary opportunity.
So let's talk about that a little bit. Like, are there specific, and I don't want to put you on the spot, but are there specific miners or industries or locations around the world that catch your attention, or specific metals groups that get your attention? Anything you want to say about that?
Yeah, there's I've covered this topic quite a bit because it's one of the questions I get a lot, you know, on what you're invested in that. And I won't get too specific because I'm not an investment advisor and I don't want to make any, you know, but I can just tell you what I've done in the past in some areas that I think, you know, are good places. I mean, if it were me, you know, silver miners are extraordinary opportunity. So I would stick with miners that mine in North America, meaning Canada, US, and Mexico. So stable governments where there's a history of good mining practices. So that what would those be? They'd be Hecla mining, Coeur mining, Endeavor. Those are some that come to mind. I have some juniors I play with, but I'm not going to mention what they are because they're kind of like nitro. So I don't want anybody I don't want anybody getting hurt in those. If you are someone who likes physical, but you don't want to have the the bother of vaulting it, keeping it on hand, moving it around. I think Sprott Sprott has the best product for that. They have a physical gold and a physical silver. They're very reputable. They're one of the biggest names in the PM business. Rick Rule and Eric Sprott are just upstanding people. They're basically legends in the mining industry. They do a 1-for-1. They vault it. They show you how it's vaulted. It's so if you want a bullion product but you don't want to be bothered with storing it, I would recommend that. And the other areas I'm looking is I still like platinum. And there's ETFs that you can buy with respect to platinum. I think platinum will run once silver and gold they're really on their way. Platinum will catch up in a big way. I also think there's an emerging uranium bull in the making, and I've been talking about that since the summer. I think it's going to be, I've participated in one of these bulls before, and they are extraordinary when they begin to get going. And there's some signs that supply is being restricted. There's some signs that Japanese nuclear facilities are beginning to come back online for the first time since their accident. That is going to put a strain on supply, already very low supply. Mines have been shut down. Miners have been restricting supply of uranium because it's been a bad environment. And the Asian market is still heavily into nuclear power and building out plants simply because the pollution there is atrocious. They need to do something about their pollution. So that's the play on that. And it's really constraining supply. So it's beginning now. The supply demand structure for uranium is looking a lot better. And for anybody wanting to play that, again, I've got a bunch of miners, small ones that I'm involved in, but I'm not going to list those. But for those just seeking some safety or just wanting to play, generally, there's a global X uranium ETF. It tracks all the uranium miners. There's also a uranium royalty trust. It's called Uranium Royalty Trust. And it basically, it follows the model of Wheaton Precious Metals for silver. Wheaton, what it does is it derives its profits from royalties of existing mine production. So it's a safe way to play. Royal Gold is another one that does it that way. Wheaton, they were phenomenally successful investment vehicles. So the uranium version of that is uranium royalty.
Man, I'm always amazed at your depth of knowledge. I don't know what to add. Let's do this. In the short term, in your opinion, would you rather be a part of the uranium market, platinum, palladium, gold, or silver within the next 3 months?
That's silver. Like I would be, if you said to me, now, do you mean like in mining stocks, or do you mean in the metal itself, or how do you mean?
Well, I hope you're not holding uranium physically.
You mean stocks, obviously, yeah. Yeah, I mean, there's no way to hold uranium. No, but you could hold spot uranium. You can invest in vehicles that track spot uranium.
So let's just open it up. Let's say out of all paper products, all physical products, all paper products, whatever leveraged products. What are some things that you personally are most interested in over the next 3 months?
Well, bullion first. I think people, if they don't have anything, they should have bullion. So I always recommend that. And secondly, high quality silver miners that operate in North America, like the ones I mentioned. There are others as well.
Yeah.
Because I think when the paper price begins to really go, you're going to see investors pile into that market.
Gotcha.
And it's a small door, and they're all going to try and get in.
As I'm taking a look, I just want to circle back to some of the current prices at, 11:30 a.m. Eastern Daylight Time on April 17th of 2020. We're seeing the gold price at 1692. We already talked about AppMax, being almost $2,000 if you want to pay via credit card or PayPal with a multiple week wait. Up on eBay, not that it's the best place to buy or sell something, but we're seeing 1/10 of an ounce of gold easily go for 225, 230, 240. That puts us in the definitely over $2,000 range. Thoughts?
Yeah, I mean, people can do what they want. I would not pay those kinds of premiums.
Yeah.
I think they'll come down, but people have to do what they have to do, right? Is it going to matter 2 years from now, 3 years from now, when silver is, north of $300 that you paid, 100% premium today? Probably not.
Yeah.
But I'm cheap that way. I won't pay those kind of,
Yeah, I get it. Also, there's a certain degree of security and calmness that comes from a person already having a position, right? Feeling
That's true. Yeah, exactly. If I had none, then I have to admit it might change my perspective.
for sure.
There's two charts that I think people need to really pay attention to.
Sure.
And one, the gold silver ratio, and the other one is the BTC dominance chart. And why I say those charts are important is because they tell you what you need to know about where we are with these markets. So
let's take a look at one of those, and maybe both real quick. I hope it's coming across on my screen. Taking a look at the gold and silver ratio, you probably cannot even see these data points. I'd have to go in here and fix this, but looks like current ratio is about 111. That's pretty high.
Yeah.
111 ounces of silver per 1 ounce of gold.
I think it peaked at 130, if you can believe it or not.
Wow. Dude.
So just so people understand exactly what this is, the gold silver ratio is how many ounces of silver it takes to buy 1 ounce of gold. So at its peak, it was like almost 130 during the sell-off that we had in March, where silver just got slammed. So that is absolutely that is peaking, and you can see that it's eased since then.
Yeah,
positive for silver and positive for the complex. Just so people understand that this ratio being too high is not good for the overall complex.
Okay.
So what you want is that ratio to come down and gold to be going up in price. When that's happening, that means that you're in a serious bull market in PM. I think we are in a bull market in PMs, but it indicates that that bull market is accelerating. We should historically be down somewhere between 15 to 1, 12 to 1, 20 to 1. Now you can imagine, and we're at 111 now. So that should tell you how much catch up silver has to do. When you start to see that really ease, down below that 110, 108 area, and we get below 100, then you know that we're really beginning to get things moving.
Gotcha. Yeah, this is definitely interesting. Definitely interesting. What was the other one you mentioned? You mentioned another chart. It was would you say a BTC to gold ratio or?
BTC dominance.
Oh, yeah. So let me take a look. I think that's represented here as total, right?
Sure.
No, that's total market cap. Do you know the ticker on that real quick? I think I have it. I just can't. I'm having
it's on my other screen. I don't have it handy.
Yeah, let's not worry about it.
But what I can tell you is that it looks suspiciously much like this chart. Not to the degree, like this is the gold to silver ratio is far more extreme, but it's expressing the same pattern, which means that so if BTC and gold are aligned, the alts and silver are aligned, which I have been saying now for the last year, that these asset classes are linked in ways that it's not well understood.
Yeah.
So when you see the BTC dominance come down, but BTC is going up in price. That's the same phenomenon as what's happening with the PM markets. That means that we are in a real crypto bull market.
Gotcha.
That has not started happening yet.
Okay. That's good to know, because that was kind of the other component of our talk today is I want to try and make some understanding about where we're at. How high can these PMs go?
Yeah, I really, I mean, the charts that go out off of this base that we've seen for the last decade, I mean, take you to really ridiculous levels, really ridiculous, like over 20K on gold, over 1,000 on silver. I mean, that is down the road, far down the road. But the thing is, we're in such a wild environment right now, just like the economic system is just it's like I refer to it as like the fun house, you know, walking through the fun house. You don't know what's real, what isn't. It's just and the more it gets like that, the more people will go to security. The more they will go to things like USD, gold, and Bitcoin, right?
Yeah.
And the USD thing is a whole other topic altogether, but eventually it will fail as well. But it's the US dollar strength will eventually collapse the global market, the global economy. And when it does that, you're going to see your gold and cryptos really, really perform in that environment. And the reason Bitcoin has outperformed gold is that it seems to be working both as a safe haven asset, Bitcoin, as well as a risk-on asset. Well, by that, I mean it's a speculative asset as well. So when things are really inflated and pumping, money seems to be going into Bitcoin as a speculative asset, whereas gold right now is really only working as a safe haven asset. So you'll see as the stock market begins to reflate and come back up, gold may ease, but Bitcoin won't. Bitcoin will go up in that environment. It seems to work in both environments, which is what's really intriguing about crypto. And I'm using Bitcoin, before people get all offended that I'm not talking. I'm using Bitcoin as a proxy for crypto.
Yep.
By the way, just before we move off of that point on the BTC dominance, if you take Ethereum out of that equation, BTC dominance is far greater than what you see. It's far more dominant than what it appears, right? Yeah, so when you take Ethereum out of that, it looks very similar to that gold silver chart.
Yeah. Thanks for that. I think that gives great perspective. I really appreciate that. Before I'm going to run out of time here. But before we pivot to something else, do you have any final thoughts on precious metals, CV ripples, anything like that?
No, I think I've covered it. I just want to, you know, people always want to know short term.
Yeah.
And there's just no way to know what's going to happen short term. If the stock markets get another bid, like we've seen the good news come out from Gilead, you're going to see what that's doing to markets. It looks like we're going to reopen up. We're going to have a soft open, you know, in the US and Canada sometime over the next few weeks. People are going to start feeling better. I'm not saying gold is going to sell off because I think it's had its liquidation. Gold and silver we're not going back to $11 silver. We're not going to see that. It's had its big, you know, right down sell off. But it could ease or it could go sideways, you know, for a while, gently sloping up. That's what it's important to watch what gold does once it starts hitting 1900, 1950.
With the state of the world in which it's in, money being printed left and right, industries being propped up, checks being delivered, restrictions, travel restrictions, local businesses still shut down. What's the big money doing? What's big money doing right now?
Right now, a lot of it is in cash. It is hoarding. Central banks and bullion banks and investment houses are beginning to raise their gold exposure. That's happening for sure. And there's a small amount also finding its way into Bitcoin. That is happening. You can see the footprints are there.
Yeah.
So they're chasing yield. There is no yield. You know,
So
you're not going to see 20% interest rates so it's like, where are we going to put our money? And gold all of a sudden has become a place to be. Now they may repurchase stocks if they think we're going to get a bid, but they're not going to be doing it in the way that they were. And you know, they're very much going to be looking at assets where they don't want to lose their money. Understand the easiest way for me to look at the economy we're going into is anything that you need is going to go up in price. Anything that you want is going to be devalued. It's going to go down in price. That's really the simplest way of doing it. So, you know, if you got a Range Rover and a Rolex and a private membership to a club, a golf club, and you've been living the life, all those things are going to hit the garbage heap. What are you going to need? You're going to need fresh produce, food, a clean living environment, maybe a workstation at home. You know, these kinds of things. It's the whole way we look at the economy is going to change. And so imagine the implications of that. That's also going to happen in investing. It's also going to happen in investing.
This is cool. I wish we had more time because your you sharing is sparring a lot of questions, which I can't get into right now. Let's pivot over to cryptos. Saw a couple interesting things that I would like your comment on, if you have one. I noticed that Binance is basically firing up an Ethereum compatible blockchain where BNB is going to be their primary token. I think they're seeing a lot of DeFi interest. Obviously, the largest amount of developers live in Ethereum. That bodes well for its success in the future. We had talked before we started recording that it's kind of like languages that are spoke continue to live and thrive and morph, and languages that people don't speak, they have a tendency to die. And I think when we're talking about something like cryptos, I think that it's very applicable. So they're calling this Binance Smart Chain BSC, where BNB will be the native token. It's going to run basically in parallel with their Binance chain, but gain all the benefits that Ethereum brings. Any thoughts about that?
Yeah, this is generally more broadly, because you certainly understand it, Moo, at the granular level, but more broadly, I see this as a move to strength in all things. So in other words, things that are strong will get stronger. Things that are weak will get weaker. So if you're sitting on some S coin, waiting for it to moon, highly unlikely you're going to see that. But ones that have displayed strength during this time, and you know what they are. We've talked about them. There's a number of coins that are doing that. Yeah. They're going to get stronger. And Ethereum has certainly proven itself. You look at its performance based, and I'll also encourage people to always look at their crypto performance versus BTC. That'll give you the real picture. People don't want to do that because it can be uncomfortable looking at that chart. It's not always a good experience when you're looking at that chart. But if you've performed BTC, you're probably sitting on a pretty good coin. If you haven't, you know, there could be reasons why that. I'm not saying it's not going to eventually work, but you need to be real. So Ethereum is just getting stronger. There's more devs on it. It's just eating up more and more of the space. I want to be involved in a project like that. Yeah. And also, when I look at my own portfolio, without revealing too much, I think I always know a performing asset when it continues to grow. I trim it here and there, but it continues to be the biggest part of my portfolio when it didn't start out being. That tells me this thing is eating everything else.
Thanks for that. I appreciate that. I did a little video called ETH, Introduction to ETH Part 1. I'm interested in doing more of that series. I hope people are finding that helpful or interesting. I think Ethereum 2.0 is really cool. It's amazing. I'm noticing that part of this BNB move, I think, is that they're interested in the idea of the validators as well. Let me just read parts of this article. All the BSC validators in current validator set will be rewarded with transaction fees in BNB. And BNB is not an inflationary token. There will be no mining rewards as what Bitcoin and Ethereum network generate, and the gas fee is a major reward for the validators. So if you can see behind the language that was just communicated, and understand it at a tech level, what they're doing is they're positioning really for ETH 2.0. That's what this is. They don't want to be left behind. So their Binance chain, there are things that are strictly Binance. I think they're happy with them, the Binance DEX, other things, but they want the flexibility, and they want holders to be able to earn rewards and do some other things, which is going to make it a very net positive for Ethereum holders very quickly, right? Starting this summer and into the fall.
And any combination of a large liquid exchange with a large liquid coin is a winning proposition. That's why you're going to see, it's no surprise to me that Binance is getting bigger, and it's no surprise to me that they're partnering on Ethereum platforms.
Yeah, that's great. Next thing, I just want to get,
that's where institutional money is going to go.
Yeah, heck yeah.
I mean, that's where it's going to go, right?
Yeah. So we've talked about collateralized debt positions before. I read an interesting article today about Rocket Liquid Pool, basically using it. Do you know what ENS is? Ethereum Name Service?
No.
So you could go out and you could register one of your Ethereum addresses, and you could just call that Santino. So when I wanted to send you some Ethereum or a ERC20 type token, and whatever mechanism I was using, either a wallet or an exchange, various other mechanisms, but I could just type in Santino, and it would just go to the one that you had registered. Does that make sense?
Yeah, absolutely. Absolutely. They're trying to work around the current bank-centric financial system that we have, right?
Yeah. Well, it makes it operate more like the domain name service in internet, right? In the internet.
Right.
And you're right. Sorry, I kind of missed your point. I understand the point you were making now. You are correct. So what this article was about was basically somebody's name. Let's just call him Matt Brantley. I don't know his first name, but he had registered Brantley.eth. Well, instead of putting up Ethereum for his collateralized debt position, he put up the domain name. That it was very important to this guy. He's building a brand, but he needed $1,000 loan over 90 days. And so basically the 90-day loan, it was worth 6.5 ETH. So he put up the actual domain name, or the Ethereum name service designation, as the collateral. You want to talk about commoditizing or tokenizing something? I thought that was cool. Maybe it's lost on most people, but I actually thought that was pretty cool. Any thoughts there?
Yeah, it's the very trickle of the beginning of a major trend, which we talked about actually months ago, which is the financialization of individuals.
Yeah.
Right. Of people, individuals, of what they have to offer, the human, like what is it that you have to offer? And you can, the tokenization of entertainers, of something that you do, a certain skill that you have. So the digitization of people. Now the conspiracy theorists will go nuts with that, right?
Yeah.
But it's going to unlock a lot of economic activity. That's where the new economy is going to be built. It's going to be built on things like that.
Yeah. What I love about this is that is almost a penalty. The thing you talked about would be the liability, right? That this person would lose their name that they had registered, right? The ease of use of name through this. What I find being the asset or the positive thing here is that it's really tokenizing a use, right? So they didn't tokenize ETH necessarily. He tokenized one of the uses of one of the technologies built on one of the coins that runs on a specific network. Do you get where I'm going with this?
Right. Which the possibilities are endless, right?
Right.
So ETH is just the railway. That's all ETH is, right?
Yeah, and it's just one subset use of this token, this change, this technology. So bringing it a little bit more kind of down to earth, it says, although domain name is generally may be purchased for very little in ENS, Brantley explained, Brantley's my first name, and this particular ENS name has great personal value to me. So I have strong incentive to pay the loan back.
Exactly.
Kind of back to what you were saying.
Yeah.
Yeah. So I don't know. I just found this really interesting. I hope this is not another aspect of crypto that I get it. I think I've seen this, but it's just interesting that now even the use, there's use aspects that are being tokenized and attributing value to beyond a token, right? Beyond a price on a chart. And this makes me excited, man. This makes me excited.
The creative potential for crypto, the good projects to unlock economic activity in the world, I don't think anybody really can wrap that around their heads, right?
It's huge, right? It's immense.
There's no question. But see, because I'm a simpleton and I'm a simple guy, I'm like, I look at the gold rush of the 1800s and I see that the people that got rich were the ones that invested in railways and the picks and shovels. Because I don't understand it at such a granular level the way you do, I'm like, you know what? I'm going to invest in ETH.
Sure.
And BTC and some of the quality blue chip alts because I know what they do. But a lot of money is going to be made in smaller projects where guys like you will understand what they do, or even individuals. A lot of money will be made on certain individuals in this space, right?
Yes. Yeah, absolutely. 100%.
Yeah.
I just want to throw out another thing here. It says, this raises the question of whether we can accurately tokenize or value sentiment. Although the transaction is recorded on the blockchain, some users suggest the valuation was way too high, or that it has little correlation to something like a non-fungible token. One user commented saying it might be worth only a tenth of of that actual market. So let's say it wasn't $1,000. So let's say, that was kind of the thing. It was a $1,000 loan for 90 days. But let's say the true actual price was only $100, or let's even take it the next step and say it was only worth $10. I don't give a shit. Like, I still think it's cool.
Yeah. The process itself is something that bears interest and to watch, right?
Yes. Yes.
Yeah, I agree, because there's a greater implication of what that kid is doing, which is what I've always said. It'll be some 16-year-old in Sri Lanka that develops a protocol or a platform that will one day go on to change the entire thinking of how we do things.
Yeah, I love the idea. And if there's any tech people out there, you can draw parallels to the ENS service and the DNS service. Well, imagine that you could derive value from the DNS service, which is just a benefit and an underlying layer technology to the thing we like called the internet. But imagine attributing value, monetary value, to the mechanism, one of the mechanisms that makes it work. I think my tech people out there will understand the significance of this in a way that maybe others, it might be lost on some. I don't know, but I just think it's cool.
I totally agree. And I think how it plays into the destruction of concentration of wealth that we're going to see in the next few years is that it will become smaller pieces for more people. That's the hope, right? And the kind of things that this guy is doing is an example of that. So once they realize that the old way of making money is going to go, like the days of the Warren Buffetts of the world are gone, right? They're gone. Like, honestly, every time that guy talks, I just get a headache behind my eye, right?
Yeah.
That's how you made money, and good for you. Total respect. You were doing it 150 years ago when nobody else was doing it. But it's your Berkshire has become bloated. It's become fat, and it's going to be demolished in what's coming. Absolutely demolished, unless they've got some Rain Man in there that moves that fund into the areas of the new economy, which I guess could happen. But they're going to be destroyed, along with large hedge funds, along with traditional managers. And so where's that money going to escape to? but it's going to escape to things like what you're talking about. That's where it's going to go. So you're going to see capital and how it works and how it moves in the world change.
Very cool, man. Very cool. Embrace change, everybody. I love this. Santino, I got to go. I got something I got to take care of. Any parting thoughts here before we end? And I can't thank you enough for your time and the private chat we had before we recorded this. And just I appreciate your friendship and your intellect. And
No, I love doing these meetups every now and then, checking in with you. And like I've always said, if people gain something out of it, then I'm happy for it, you know?
Yeah. Thanks, buddy. Hope you have a wonderful day and see you at the happy hour tonight, maybe.